You know that feeling when you're trying to get a handle on the stock market, but it just feels like, well, like you're drowning in charts and really complicated strategy.
Like information overload.
Exactly. You just want to understand what's actually happening,
Yeah.
right? Without getting bogged down in tons of info.
Mhm.
Well, this deep dive is designed for you, someone looking to gain that market knowledge efficiently, cut through the complexity.
Right. And we're not just, scratching the surface. We're going deep into one specific system for looking at stock market trends.
Okay.
Think of it as getting a really insightful angle on where prices might be going.
And this angle, this perspective, it comes from something called the Ichimoku Cloud trading system.
That's the one.
It's a Japanese technical analysis method, and I'll admit, the name, it sounds a bit mysterious, maybe intimidating,
It can sound that way, yeah.
but don't let it put you off. We're going to break down its core ideas in a way that's hopefully surprisingly clear.
And our guide here is a really good YouTube video from Pushkar Raj Thakur. He's a stock market educator. Okay. And he does a great job explaining the Ichimoku Cloud for like both short-term and long-term trading. We're basically pulling out the key bits for you.
Got it. So our mission is pretty straightforward. Understand the main ideas behind this Ichimoku Cloud and how it tries to give you this multi-layered view of where prices might move.
Precisely. A layered view.
Okay, let's dive in then. When we talk about technical analysis and indicators, what are we really looking at fundamentally?
Well, fundamentally, technical analysis is just about understanding how the market behaves by looking at, past price movements and volume. How much was traded?
Right, history repeating, sort of.
Kind of. And indicators are basically just math formulas applied to that history. They show up as lines or visuals on a price chart.
Like RSI, MACD.
Exactly. RSI, GD, Supertrend, Bollinger Bands.
Yeah.
You might have heard of those. They're all indicators, and honestly, some can get pretty complex.
And that brings us back to Ichimoku. The source calls it a master indicator. That sounds, well, it sounds like it's trying to do more.
Yeah, and that's kind of the point. Why master? Because it doesn't just focus on one thing, like momentum or volatility.
Okay.
Instead, it combines multiple calculations, multiple visual elements, all in one chart. The goal is to give several layers of confirmation for potential signals.
So master because it integrates different viewpoints. Now, the video mentions triple confirmation. Sounds great, but you also said no indicator's perfect.
That's such a crucial point. Really important. Well, Ichimoku aims for this triple confirmation to suggest, a higher chance of a price move. It's critical to remember, no indicator predicts the future with 100% accuracy, ever. The market does its own thing. Unexpected news hits.
Right. Black swan events and all that.
Exactly. So think of this as boosting your awareness of potential opportunities, not like a crystal ball.
Okay, got it. Improving analysis, not fortune telling. So practically, how do we get this cloud thing onto a trading chart? The source used up stocks?
In the video, he shows it on up stocks.
Yeah.
And, like he says, and it's good advice, always do your own homework before investing. No tool replaces research.
Definitely. Due diligence first.
But yeah, usually, on most platforms, adding it is pretty simple. Go to Indicators, type Ichimoku, that's Ichimoku, and just click to add it.
And boom, it appears. But the video points out it can look maybe a bit much at first. Lots of lines and this colored cloud, green and red.
Oh, absolutely. First glance, it can definitely seem crowded. You've got lanes weaving around the price, and then this shaded area of the cloud, green or red. It's easy to see why it might look overwhelming, but once we break down the parts, it gets much clearer. Promise.
Okay, let's do that then. Break down. What are the pieces? The video mentioned a conversion line and a baseline.
Let's start there. Two key lines. The conversion line, often it's blue in the standard settings, like in the video. That's basically a shorter-term average price. Usually looks back, say, 9 periods.
9 periods. Okay,
Yep.
short term.
Then you have the baseline. Typically orange. That's a bit longer-term average, often calculated over the last 26 periods.
26. So blue is faster, orange is slower.
Exactly. Different look-back periods mean they react differently to price changes.
Makes sense. Okay, blue conversion, orange base. What about this cloud structure? Leading span A and leading span B, the video called them.
Right. This is where the cloud, or kumo, that's the Japanese word, means cloud, comes from.
Okay.
You have leading span A, Senkou span A, often green, and leading span B, Senkou span B, often red. Now, these are also based on averages, but, and this is the really interesting part, they are projected 26 periods into the future on the chart.
Ah, okay. So they're plotted ahead of the current price.
Precisely. The space between span A and span B is the cloud, If span A is above span B, the cloud is usually green, suggests potential uptrend support.
And if B is above A,
Then the cloud turns red, hints at a potential downtrend, maybe resistance.
projecting potential future support and resistance. That's a cool visualization. And there was one more line, right? The lagging span.
Correct. The lagging span, Jiku span. Often green in the examples. This was simple. It's just the current closing price, but plotted 26 periods behind where the price is now.
Behind, so it's looking back.
Yeah, it gives you a retrospective view,
Mm.
compares where the price is now to where it was roughly 26 periods ago,
Yeah.
like a month back on a daily chart.
Okay, let's recap. Conversion line, blue, fast. Baseline, orange, slower. Leading spans A and B forming the future cloud, green or red. And the lagging span, green, trailing behind. Phew. Now, how do these fit together for that triple confirmation?
Right, this is where it gets really practical. The triple confirmation system is looking for specific alignments of these parts to suggest a higher probability trade.
Okay, confirmation one.
Confirmation 1 is the conversion line crossover.
Uh-huh.
A bullish signal happens when the blue conversion line crosses above the orange baseline. Means the short-term average just got stronger than the longer term. Potential upward momentum.
And bearish is the opposite. Blue crosses below orange.
Exactly. Conversion line crosses below the baseline. That's your potential bearish signal.
Got it. Crossover check. What's confirmation two?
Confirmation 2 involves the lagging span's position. Remember that green line trailing behind?
Yeah, the one plotted 26 periods back.
Right. For a bullish confirmation, the lagging span should be above the price level from 26 periods ago, which visually means it's above the price bars at its current position on the chart because it's shifted back. It suggests current prices are higher than they were back then, supports the uptrend idea.
Okay. And bearish, lagging span below the price.
Lagging span below the price level from 26 periods ago confirms downward momentum from that historical perspective.
All right, so lagging span gives historical context. What's the third and final confirmation? Must involve the cloud.
You got it. Confirmation 3 is about the current price's position relative to the cloud itself.
The future cloud.
The one projected 26 periods ahead, yes. For a bullish confirmation, the current price should be trading above the cloud. That cloud below might act as future support.
Makes sense. Price is flying high above the potential support zone.
And for a bearish confirmation, the current price should be below the cloud. That red cloud above might act as future resistance, pushing prices down.
Okay. And I heard you mention the cloud's thickness matters too.
Yeah, that's a nuance. A thicker cloud can suggest stronger potential support or resistance than a thin, wispy cloud.
Interesting. So, putting it all together, for a strong bullish signal, ideally, blue line crosses above orange, the green trailing line is above the price, and the current price itself is above the green cloud.
That's the trifecta they're looking for, the triple alignment.
And the video gave real examples, right? You mentioned Udaipur cement.
Yes, the speaker shared his own experience there. Said he saw those bullish Ichimoku signals, the crossover, lagging span above, price above cloud a couple of days before recording.
And then the price went up?
And then he noted the price did increase afterwards. Now, obviously, one example isn't proof, but it helps connect the theory to a potential outcome.
Sure, anecdotal but illustrative.
And a key point here is that Ichimoku, because it blends momentum and trend, can be pretty good at catching the start of new trends. But, warning, in choppy sideways markets, you might get more mixed or false signals.
Good caveat. Not great for directionless markets. And the bearish example, ICICI stock, red clouds.
Exactly. For ICICI, the video showed red clouds appearing potential downtrend. He pointed out the bearish crossover, blue below orange, the lagging span below the price, all confirming the bearish outlook.
Inverse logic, cloud above the price acts as resistance.
Right. It really shows how Ichimoku tries to give that holistic view, trend, momentum, support, resistance, all baked into one visual. Helpful for finding confluence where multiple signs agree.
These examples really help visualize it. Now, the video stressed just understanding isn't enough. Practice is key.
Oh, absolutely essential. Like any skill, right? You got to use it to get good at it. The video strongly pushes paper trading for beginners.
Simulating trades, no real money.
Exactly. Track potential trades on paper, see how the Ichimoku signals were played out. Did they work? When did they fail? It's a brilliant, risk-free way to get a feel for it in different conditions. Build some confidence.
Makes total sense. Hitting the driving range before taking the car out, get comfortable first. And if people want to go deeper, there are more resources.
Yeah, the speaker mentioned his full playlist on technical analysis. There's always more detailed, more nuances with Ichimoku, and how to maybe combine it with other tools.
Okay, so let's try and wrap this deep dive up. What are the absolute key takeaways on this Ichimoku triple confirmation thing?
Okay, the 3 core bits to remember.
One,
The conversion line crossing the baseline, blue over under orange. 2, the lagging spans position, green line above below price. 3, the current price's position relative to the cloud, price above below the cloud.
crossover, lagging span, cloud position, check.
When those 3 line up in the same direction, all bullish or all bearish, that's your higher probability signal according to this system.
And for you listening, hoping to get knowledge efficiently and feel less overwhelmed, how is this system relevant?
Well, I think that the Ichimoku offers a really structured, multifaceted way to look at potential stock moves. Instead of juggling 5 different indicators maybe,
Yeah.
it integrates these layers onto one chart that can help you build a more complete picture of what the price is doing and hopefully, reduce that feeling of being lost in just tons of random data points.
Right, a more organized dashboard. Okay, here's a final thought for you to chew on. How might you combine these Ichimoku signals with your own research, like understanding the actual company? And maybe, what about looking at these signals on different time frames, like a daily chart versus a weekly? Could layering those perspectives give an even sharper view of potential moves? Something to think about taking this tool and really making it part of your own informed strategy.